Good morning, and thank you for joining us today. I'm Nicholas Ganos, Director of Investor Relations, and on behalf of Wangard Partners, we appreciate you taking the time to learn more about the Wangard Midwest Multifamily Development Fund. In today's presentation, we will walk through the fund's investment strategy, the Solhaven branded platform, the identified project pipeline, and key return objectives. We'll also discuss why we believe the Midwest is a compelling region for multifamily investment. Our presenters today are Burton Metz, President of Investments and Acquisitions, Eric Gum, Vice President of Development, and me. First up is Burton Metz. Burton, thanks for joining us today. In today's webinar, we'll get into specifics of the projects we are evaluating, the history of our prototype model, and key details of the fund. But before we do that, let's take a step back and look at the market from a broader perspective on why we believe this is a compelling opportunity for investors. So Burton, I'd like to ask you the following: why this fund and why now?
Great. Thank you, Nicholas. I want to frame this fund really around three core ideas. First, this is a prototype-driven strategy. We're not approaching each development as a one-off project. Solhaven is a product that we refined over our past 30 years of operating and developing multifamily. It's a major part of our risk mitigation strategy, keep our ongoing and our upfront costs down, and really our NOI up. And the more we can standardize the variables we control, the more we can focus on attention on the variables that matter: the site, cost basis, market depth, execution. And Eric will get into that in much more detail. Second, this really continuation of Wangard's track record in operating platform. We have been developing and owning real estate throughout the Midwest over the last 30 years. So the fund is really a way for investors to participate alongside us as we scale this, which is core to our business. And then the third is really the housing demand in the Midwest markets. Harvard recently came out with a study and really emphasizes the backdrop of the market we're in today, as we all can kind of feel it and see it in the headlines. So high home prices, interest rates are continuing to push up, bringing home sales down. Insurance prices continue to go up, and rent burdens really continue to create major affordability challenges. So there we believe there's really a need for high quality, attainable housing, really bridging the gap between apartments and home ownership. So when we talk about the fund, as Nicholas asked, the opportunity is not just about multifamily. It's really about kind of a disciplined multifamily strategy and using a repeatable products and using, going into markets we really have been underwritten with a strategy we've executed on before. So with that, I'd really kind of take a step back also and get into Wangard's history. That's an important thing to start with our experience. So development, as many of you know who have invested with us in the past, it's really an execution business. So the underwriting matters, the market matters, the products matters, but ultimately investors should be asking with us or with others, who's actually executing the plan? Who is the sponsor? What is their experience? So, Wangard's been in business since 1992. We've developed and acquired over $2.5 billion of assets over that time. And just in the last 12 years, as this chart shows, we've completed more than 25 full cycle investments with an average IRR of 28%. So though track record does not guarantee future results, it does matter. We've been through many cycles and consistent returns for investors. And what we're looking to really do is kind of extend out that team and this platform into this fund. So, the integration, of our team is really important in today's matter, even, in today's environment more than ever. Capital is selective, construction costs remain elevated, municipality and entitlements are complex. So execution risk is really, front and center. And so we're really involved from our initial kind of site selection through entitlements, financing, construction, operations, and asset management, eventual sale. So I guess the key point here is really the fund is not a new direction for Wangard. It's a continuation of what we've done, and with a more focused, scalable strategy around the Solhaven platform. So next, I'd like to kind of dive in why really the Midwest. So we believe the Midwest is where our experience, our products, and the current housing market line up. So, there's been a lot of different studies about kind of the rent growth in different markets, the supply. CBRE recently came out with a study, actually showing some headwinds in the Sun Belt and mountain markets, but the Midwest having sustainable rent growth and very stable fundamentals. So in Q1 of 2026, the Midwest actually led the U.S. in year-over-year rent growth. And many in the Sun Belt and other Western markets actually have declining rent. So the other part of that is there's been historically low apartment starts. We actually just hit a record low over the past 15 years. So to us, that's a sign rental rates are going to continue to increase here in the Midwest. And having a recipe for development such as we have is kind of key to be able to participate in that and creating a moat there. The other part of just being in the Midwest is it's really, for us, it's steady. It's not flashy. We think that's part of the appeal. We're not underwriting, kind of speculative growth of these high volatility markets like the Sun Belt. And we're really focused, as Eric will kind of touch on communities with employment access, income depth, local infrastructure. And in many of those markets, there's a widening gap between cost to own and the cost to rent, as this slide shows here. So you can see here across many markets like Milwaukee, Chicago, Minneapolis, Madison, the cost of ownership is meaningfully higher than the cost to rent. So you can see these kind of 50% higher in many of these markets to actually own the rent. And that's a major driver for our demand of the product. And so for many households, this decision is not simply whether they want to own a home, it's whether ownership actually makes sense given interest rates, home prices, taxes, insurance, down payment requirements. So this dynamic really expands the renter pool and sets us up well for the Solhaven product. It's really designed to offer a single family living experience while being efficient, being ran efficiently as multifamily. The next slide, Amanda, if you want to go to the next, really gets to who we're building for. So this is kind of the target renter. It's not one demographic. It's really the two largest cohorts in the U.S. population, which is the millennials and the baby boomers. So in our demographics, those are our two biggest bubbles of renters that really match up and pair well with where the U.S. is at. The millennials and Gen Zs looking to form households, start families, wanting more space, but not really ready or able to buy a home. So you can kind of see that, imagine what the inverse of this chart is, really showing that the need for millennials is high from a renter perspective, and it's fairly stable on the boomers of needing to rent, a smaller percentage, but it's actually increasing. So these are renters who want more than just, a conventional apartment. They're really wanting to kind of tie it to the feel of a single family, which is what we offer. It gives the residents kind of a neighborhood experience, direct access, modern layouts. It really lives like a single family home. And so for investors, that broad renter profile is important because it's not dependent on one narrow demand driver. The product can really appeal to, renters by necessity and renters by choice. This next slide is consistent with what we see with our own developments. These are not, on the right there, they're not necessarily abstract preferences. They're directly affecting our leasing velocity, resident satisfaction, our renewals, our performance of the asset. So Solhaven is designed really around these factors, and it's why we have some of the top ratings across our communities in the U.S. So location accessibility, are addressed through our site selection process. Affordability and values addressed through our, kind of attainable rents relative to income and the rent versus ownership gap mentioned before. And then the property condition and maintenance are supported by Wangard's operating platform and property management experience. So, and then lastly, the amenities are really built in to the community design, and the safety and community are, really felt by the direct entry neighborhood layout. So when we talk about Solhaven, it's not just talking about buildings. We're talking about a product design around what renters are actually looking for and what we believe that investors should care about, with the demand depth, repeatability, and the operational consistency. So with all of that, I've really tried to frame the why behind the fund, as Nicholas asked about, and I guess now would like Eric to talk through the how we evaluate the markets, how we go from regional to specific sites, and how the Solhaven prototype really helps us execute this.
Great. Thanks, Burton. Well, in looking at areas and specific areas of emphasis within the Midwest, we as a development team are taking a real data-driven approach to benchmark and quantify which markets fit best for our Solhaven two-story prototype. And in doing so, the development team has come up with its kind of unique market selection process where we look at over 20 different key metrics to identify which of the markets throughout the Midwest have the strongest multifamily investment or multifamily development metrics. And Amanda, with the next slide, I'll kind of go into those in a little bit more detail. And through this methodology and Z-score process, it's really looking at the standard deviation from the mean on a number of different categories. Some of those categories include taxes, the tax environment, the economic strength and employment trends, job growth, unemployment rates, demographics, including incomes, population growth, and then the multifamily performance with rent growth, rents, vacancies, things like that. So that's really on the metric side of it, the quantifiable metric side of it. From a qualitative standpoint, we're also layering in other benchmarks into our analysis as well. So when we're looking at these various markets, we're also looking at the liquidity and the exit opportunities within these various markets, operational efficiencies. Wangard has a very strong property management division, and in looking to take advantage of that, where can we look to bring our expertise and our operational efficiencies to try to reduce operating expenses and take advantage of some centralized staffing as much as possible. And then the other qualitative measure that we looked at was qualified contractor coverage. With the work that has been done throughout southeastern Wisconsin, there's a lot of strong relationships with contractors to build the Solhaven product. And we made sure that when we were looking at additional opportunities outside of Wisconsin, that there were qualified contractor coverage with groups that have experience in the markets, all the nuances that come with developing in these different markets, but then are also very familiar with the two-story product as well. And through all of that, our initial primary markets are going to include southeastern Wisconsin, Milwaukee down to Kenosha, Dane County and the Madison area, Northern Illinois, the collar counties. This is exclusive of Cook County. So looking at those collar counties on the northwestern and western and southwestern areas of Chicagoland and the Minneapolis region as well. We did identify and highlight future potential markets that kind of checked all the boxes on the metrics that I mentioned previously. Those include Grand Rapids, Cincinnati, and Kansas City. But in the near term, our immediate focus will be on the Milwaukee, Madison, Northern Illinois, and Minneapolis areas. And through all of our analysis as well, it was a tailored approach to look at and flush out the metrics that maybe don't align with the product that we're looking to build. So we made sure that we focused on the multifamily performance metrics that focused on newer build, like-kind product, to make sure that we weren't diluting the analysis with higher density product, older product that either wouldn't compete with what we're trying to bring with the Soulhaven brand or with the vintage and the type of care that we bring with all of our new developments. And we currently have 3 and actually 4 projects already identified that are in various stages of the project life cycle. We have Oak Creek, Soulhaven Oak Creek, which is 234 units, Soulhaven Janesville at 208 units, Soulhaven Gurnee at 260 units, and then there is a 4th project in the Northern Illinois region near Romeoville that is also being slated for 260 units. So those 4 projects all are the Soulhaven prototype brand. And with the benefits of the Soulhaven standard, the Soulhaven prototype, it really helps bring some, it removes some of the variables in going into newer markets. It's a product type that we have familiarity with. We've built before. We know what to expect with it. We know how to design these. We know how to design the site. We know how the building is designed. And that gives us some predictability. It's a repeatable product that we actually source land sites to fit the Soulhaven prototype. We do not go out and find a site and try to modify a product to fit that site. So it really is tailored. It's guiding us towards the right sites that fit the Soulhaven brand. And it's a standardized product that we have familiarity with both design and construction that allows us to be more efficient with our upfront design with all of our consultants, both on the architectural and the civil side. We know how these are laid out and designed, and we're able to give really clear guidance to every new project. Helps us accelerate our construction timelines too. Our first buildings are typically turned over around 8 months after construction commencement. So the cash flow starts earlier, and then with a phased building approach, we turn about another building about 3 to 4 weeks after the prior one. So it's a phased approach that allows for that earlier lease up velocity, and it in turn with our general contractors, it gives us more predictable costs where we are able to benchmark and trend where we believe costs are to be, which is also factored into our market analysis. So with all those benefits that come with having a standard Soulhaven prototype, it better allows us as a firm to scale into multiple markets. We know the product that we're going to be delivering. We have conviction that there's demand in these markets for this product type, and it provides us with clarity on both the cost and design with our outside consultants. So the prototype approach with the 2-story walk-up Soulhaven brand is really primed for an appropriate scaling into these other markets, market expansion elsewhere in the Midwest.
Thank you
With
for
that,
that.
yep, I'll
Yes,
hand it over to you, Nicholas.
beautiful. So we talked about why we have the prototype, but why did we brand it Solhaven? Why does that brand matter? Because we're not just talking about the name on a building. We're talking about a repeatable platform, a housing model that's designed to deliver consistency, efficiency, and honestly, a stronger resident experience, which is very important. For the residents, what does the Solhaven brand mean? Well, it's designed for the calm, practical, and connected feel. It emphasizes everyday livability, gives quiet and bright homes, practical storage, private entries, and optional garages. And they're not just design features, they're to support the larger brand promise of making that home feel comfortable and personal. And the Solhaven brand also balances privacy with community. So while residents can enjoy that private entry and sense of ownership, they also have access to shared spaces like the Commons, which includes the pool, the fitness center, and the community room. They'll also have a dog park and then also all the nearby amenities that we look to place the product in near. Why does the Solhaven brand matter for marketing? Well, it gives Wangard a consistent story to tell across all the communities. So rather than launching each property as a unrelated project, we create recognizable umbrella entities. The entity helps the residents, investors, municipalities, and partners understand what they're expecting from the Solhaven community. And from a marketing standpoint, it's recognizable, scalable identity, where you have a consistent name and brand identity across multiple multifamily projects. There's market differentiation, which provides a clear positioning of that project in a specific market. It provides stronger leasing efficiency, where you have the messaging, the visuals, the resident experience, and advertising that can be standardized and improved over time across all the projects. And then the expansion, as Eric talked about, into new markets. Building a brand is hard to replicate. So now we can enter new markets without having to reinvent that identity every single time. The Solhaven brand also matters to investors because it's a repeatable investment thesis. Again, as Eric got into, Wangard knows the product, knows the design, knows the cost structure, the branding, and I guess more importantly, the target resident profile, as Burton got into earlier. So this creates a stronger foundation for underwriting and ultimately execution. And why the Solhaven brand matters to communities? Well, we provide a model that is proven and that is easier to evaluate for these communities we're going into. We can point to existing prototype communities that we've already done, demonstrate how the design works, and show how the product supports the housing supply, walkability, and really the look and the thoughtful landscaping that we can go into, all of which communities are looking for. So with the Solhaven brand and the prototype, we've done previous prototypes before, and they include, and as some of you are existing investors, you've probably heard of some of these names, if not all of them before. For those that have yet to invest with us, we've had 4 prototype designs that we've done in the past. The first one, Tivoli Green, in Mount Pleasant, started in 2018, 2019, first of 3 phases, which the total now is 458 units in Tivoli Green. Lachlan Apartments in Oconomowoc, 224 units. The Landing at Hub City, 156 units. And the first Solhaven branded project in Grand Chute, which is 208 units. Construction started in December, and the first building is expected to come online at the end of June. So in total, more than 1,000 units using this prototype design. And we feel that adding the Solhaven brand to it will be more than beneficial as we move forward into future projects and future municipalities. So now we'll get a little bit into the fund overview. So the focus, as we've talked about, is Midwest, targeting ground-up development of the Solhaven brand. This is going to provide diversification across multiple projects and multiple locations. We're targeting $30 million as the equity raise with a targeted IRR of a minimum 18%. We're going to provide a 9% preferred return, slightly different than what our direct investment opportunities are in the past. And that $30 million is going to be deployed across 4 to 6 projects. Again, 4 of them under our control in Northern Illinois, in Minneapolis, and in Milwaukee area and Janesville, with future projects in Illinois, Madison area, and Minneapolis. And with each of those, we'll look to deploy around $4 to $6 million into each project. The term of the fund will be 7 years. It'll give us 24 months to raise the money and an additional 5 years to have the projects developed, stabilized, and then exited out of. And for those that are potentially interested, we do allow what's called sidecar opportunities, or the opportunity to invest not only in the fund, but we will still have these projects that we're talking about available for individual investments. So there is an opportunity to do that. So that is the overview of the fund. I do see that there are a couple of questions that have come through, so we can take some time right now to answer those. The first one is, again, what the expected hold period is for each project in the fund and what's the strategy to sell. So each project, as we've gone through in the past with the opportunities that we've had for development, they've typically been a 3-year hold where we've developed, we've stabilized, and we've looked to sell. And that is not going to change. That is what we are looking at for each of the projects in the development. They will be phased. So as we go through, we will look to sell the projects as they come to that 3-year period. Return the cash to the investors as we have other projects go in. So that is how we're looking to hold each project as part of the fund. Another question is how construction costs are being locked in or controlled. Eric, can you talk a little bit about that?
Sure. Well, one of the benefits that I talked about of having a prototype product and having built the prototype product before is more predictability on the construction cost side of things. And when we were looking at and benchmarking markets, and it includes Northern Illinois and Minneapolis, we, as part of our qualifying process, we had multiple discussions with contractors to, and for a couple of reasons, to understand the costs in that area, just general trends, qualify these general contractors to make sure that we had a building partner in these various markets, but then also use our past plans and in past projects to provide these GCs with a basis to help us kind of quantify where the Solhaven product would be priced at in the current market. So it was making sure that we weren't spending time in these markets if we did not have conviction that we had the right partners in place, or felt that the pricing was adequate in these markets to allow for the product to make it essentially a viable project. So We have 2 identified partners in Northern Illinois, and we have a third in the Minneapolis area as well. And those groups are involved at the very beginning, upfront on any new project to make sure that we are getting updated initial pricing before we spend too much time on any project that we vet.
Excellent. Thank you, Eric, for that. And we have time for one more question, and that is, what are the biggest risks for the fund, and how will Wangard look to mitigate them? Burton, are you able to answer that one?
Sure. Good question. I'd say the main risks are similar to development on a one-off project as well. So I would say entitlement, interest rate, construction costs, exit caps. But I think our response to that is part of exactly what we've been discussing here. And it really comes down to the discipline, the consistency, the repeatability to kind of really mitigate those variables. So, as we have the repeatable design, we have less variables, we have quicker to market to get that first building built within about 8 months. And so you kind of lower your risk profile with the platform we're creating. And then I would say, the other part of creating the fund is kind of what you mentioned, Nicholas, of really kind of that diversification across multiple projects and across multiple markets with that. And frankly, actually with different timelines, right? So you have that diversification in multiple factors, compared to kind of individual deals, though, obviously, as you allude to, we're still welcome and open to sidecar investments, but really that fund helps create some of that de-risking and, removal of some of those variables within the platform.
Thank you for that, Burton. And we do have one more that just came in and that we have time to get to. And it asks, will the fund be seeded with any existing properties? And the answer is no. This is a pure development investment opportunity for the fund. So any previous projects that we have been a part of, we are not going to put into this fund. There'll just be future projects on that. If there are any other questions, please feel free to reach out to us. We thank you again for everyone that has been able to join us. We appreciate you taking the time to learn about the Wangard Midwest Multifamily Development Fund. As always, the projected returns are based on underwriting assumptions. They're not guarantees. So please consult with your tax, legal, or financial advisor regarding this opportunities. We look forward to talking with you in the future. Thank you very much. Have a good rest of your day, and goodbye.
Thank you.